Hello, everyone. Welcome back to today's episode or today's video. Today, I want to talk about 10 habits that is killing your dream of financial independence. You may not know it, but I've researched my years of research and having read about 64 books on financial freedom or financial independence, and also from my own life, from the life of those around me, my friends, my family, my extended family. I have come to the conclusion that these 10 points are the reason why people are being kept in poverty for all their lives. And if anyone can follow, and if anyone can able to dismantle all these 10 points, definitely you'll be able to excel and able to achieve your dream of financial freedom or financial independence. And this also goes back, if you look at the Atomic Habits, a book I've read, talked about these little changes, these incremental changes, 1% change or 1% adjustment that we make in our lives, or 1% of consistency that we adopt in our lives can compound to almost 38% annually. That is a tremendous achievement. But first, we have to start from somewhere, okay? The same thing and Morgan Housel emphasized in his book about the psychology of money. We all are brought up in different places or in different culture, different tradition, different beliefs about money, about wealth. Some of us have been inculcated into our minds this poverty mentality, and to an extent that we've built in us that wealth or financial freedom resistance. And it goes back to not just you, but it goes back to what you've been taught or what we've been taught by our parents, by our first, second, third, fourth, fifth generations, because they didn't have much, so they pass it down. And that culture, that belief is being kept passing down to the next generation. And as a result, most of us has been kept in poverty and we're still poor. Okay? Before I continue, I just want to say that if you're new in this place, on this channel, please don't fail to subscribe, and share and hit the like button, and also hit the notification bell so that whenever I drop something, so that you always pick it up, because I always drop videos every week. I have 4 YouTube channels that I drop video on every week, okay? And at least I drop about, on each of my channels, 3 videos per channel per week, okay? But today, let's dive into 10 habits that is keeping you and some people that you may know poor. And if you can break out of these 10 habits, you will achieve your financial freedom. Let's dive into the first one. Okay? So the first one is, when we receive our income, and this is also, you can read this if you have the book, or if you've bought the book, or I will recommend that you go read the book by Robert Kiyosaki, The Rich Dad and the Poor Dad, or another book that I so much appreciate and love is Think and Grow Rich by Napoleon Hill. if you read these books, especially from Robert, he talked about, for those of us who are in employment, when you receive your paycheck, the first thing you do is, you don't pay yourself first. You try to pay up everything. And at the end of the day, you're left with nothing, even nothing on your savings. You don't even have this 1% for your, or even 0% on your savings. But I want to encourage you today, as you can see on my blackboard here, this is a blackboard I use in lecturing people on budgeting. Now, you can implement, and that's because people don't have budget. Because if you have budget, it's either you're doing 80-20 principle by priority, or you're doing 50-30-20, meaning that 20% of your income must be saved. Okay? And the rest, 80% or 50 or 30%, is for your expenses, whatever those may be, or your leisure and your enjoyment or whatever. But 20% of your income, whatever that income is, whether it's from your work or your job, salary, your business or whatever, or any income or passed down from your parents or inheritance or whatever, any income you receive, the first thing that must come to your mind is get that 20%, pay yourself that 20%. And how do you pay yourself? By moving that 20% into your savings account. That is how you pay yourself. And one of the reasons why people don't have emergency funds is because they don't do that. And at the rainy day, everybody's running scatter because they haven't done that. I mean, they haven't planned for that. So the first thing that should go to your mind whenever you receive your money is to pay yourself first. Get that 20% out of the way, put it on your savings account or whatever I can that you will not touch it. And the next one, that another thing is people living paycheck to paycheck. Because, and the reason why people live paycheck to paycheck is because they don't have any other source of income. And that is the biggest mistake people make, because one source of income cannot sustain you as a single person, or sustain you and your family or couple or whatever. It's not possible. So you need to diversify. If you listen to one of my investment channel, you have to diversify your portfolio. Me, Ernest, talking to you right now, I have 10 sources of income. 10 sources of income, So if one source of income stops, I still have 9. If 2 stop, I still have 8. If 3 stop, I still have 7. If 4 stop, I still have 6. So there's no way I can ever go broke. And each of the 10 sources of income provides me with 6, 7, 8 figures annually. So, and you need to do this as well. Have different sources of income. Don't rely only on your salary. You can invest your 20% in either mutual fund, in stocks, in dividend yielding stocks, or utility paying stocks. Or you can join forces together and begin to invest in properties. And most especially nowadays, or these days, you can even invest in property without having a penny. And how do you do that? Well, that's a different video to get about. Just explain how you do that. That you can get a property, you can go scout for a property, go into the property market, scout for it, bid for it, get it, and then look for somebody who has money that can purchase that property from you, and they will pay you, and you pay off the property, or they pay you a commission that you take your commission, and the property is theirs. By the time you flog 2 or 3 or 4 of those properties, you're already an investor. You have enough money to begin to invest in property on your own. So don't rely on one source of income. The same thing Robert Kiyosaki said in his book, including his cash flow quadrant. As you can see on my board here, something here. I said here, cash is king, like we say in finance. I'm an accountant. I was an MBA and finishing up my PhD. But none of those matters. What I'm here to tell you is that you shouldn't depend on one source of income. You have to diversify your sources of income. And then I want to move on to another most important thing, which is number 4, is that people often accumulate debt. Why do you accumulate so much debt? You have to bust those credit cards. You don't need it. You don't need them, because all they do is they keep you in debt. Any amount you don't pay off on your credit card accumulates interest. And the interest you're paying is not for your own good, it's for the good of the credit card company or for the bank. Okay? The bottom line is you have to enrich yourself. You have to make yourself richer and wealthier and not making somebody else richer and wealthier. I do know that from time to time, we take credit cards or we take loans. But the cycle, if you don't break it, the cycle it has a snowballing effect. So you have to break it, because debt keeps you in bondage. Like my grandfather used to say, a borrower is always a slave to the lender. And debt keeps you, and debt denies you and steals your financial freedom dreams. And you can't let that happen. So you have to do it with all those credit cards or debts and loans. Short debt, payday loans or short-term personal loans or whatever. Okay? And the reason why you're getting those loans is because you've never paid yourself the first 20% of your salary. Because if you've done that, you wouldn't even have to go get this loan, because you use your own emergency fund to take care of that emergency that has arrived in your life. Okay? And then number 6 is that this is another very important aspect, is that people try to avoid risk. People say, oh, I don't want to do that business. I don't want to invest in stock. It's risky. And there's another myth that people always say, the stock market is a gamble. It's a gambling game. There's no gambling in stock market. There's no gambling in investing in stock market. Okay, it's just a myth. And it's a myth that has been rebuked many times. Okay? And some people say, oh, I don't want to go into business. Oh, what if I lose all my money? Okay? But that is where the problem lies. If you don't want to take a risk, then you won't get any reward, because the framer of the whole universe the founder of the universe has so framed the universe that it's all about risk. If you don't take risks, you won't get any reward, even for you to walk for you to walk across the street, or for you to walk from your bedroom to your kitchen to take water. It's also a risk. Everything we do in life is a risk. Okay? So you have to stand up and say, I must go for this. Do your research and try to diversify your investment portfolio. And another thing is, people don't invest. A lot of people don't invest in financial education or financial literacy. I'm not talking about college courses here. You don't need to go to college for you to become a financial pro. You don't need to be an accountant like myself. You don't need to hold an MBA like me. None of those matters. You don't need to go to college for you to be financially literate. You don't have to. There's so many courses online. There's so many books out there that you can buy, you can read, you can attend, and you know how to manage your money. Because managing your money start from budgeting your money, knowing your sources of income, knowing your outgoings, which are your expenses. And then you have to understand your liabilities, your asset. Then you have to understand cash flow. These are only 5 things that matters. Only 5 things that matters. Just only 5 things that matters that you need to understand for financial literacy. You need to understand your sources of income, your income. Understand your expenses. Understand your liabilities, your assets that you have to build, and then your cash flow. And most importantly, your cash flow, because you must know if you have cash enough to deal with anything that comes. Now, actually, what is financial freedom? Financial freedom is the ability to do whatever you want, how you want it, when you want it, without worrying about money. You don't have to worry because you know I can do this, I can go there, I can buy this, I can attend that, I can give this. That is financial freedom, and that is financial independence. Okay? And we'll proceed to number 7, and that is neglecting to plan. Again, it comes down to budgeting. When you don't budget, you don't plan, because when you budget, you definitely have a plan. How you're going to invest, you definitely have a plan on what you're going to save. You definitely have a plan, and for your holiday, for example, going on vacation, buying a house, but also you also have to plan for your retirement. You know, and I must also throw in here that buying a new car is not an investment. If you watch one of my videos, the wealth wrecker or the wealth destroyer, you understand what I mean. Buying a new car is not an investment. And if you just get a new job, or if you just graduated and you're starting your life, and now you have a new job, we've been taught by our parents, then the next thing is to go buy a house, marry, have this family life and all that stuff. To me, that is just garbage to me. Of course, you have to marry, but you have to lay the foundation first. Buying a house, you put in yourself under undue pressure, and you're wasting your money because your house is not an asset. It's not a cash flow asset. What you want to invest is assets that generate cash for you. So what I've advised people to do is, before you buy your own residential house, try first. The first thing you should do, if you have that possibility to buy a house, go and buy a rental house. Buy that 2-bedroom, 1-bedroom, a penthouse, a whole house, or whatever. Then put it on rent. Put it on rent, because on top of that, maybe you're paying the mortgage for that flat, for that apartment, for that house. You're paying a mortgage of say $1,500 a month, or $2,000 a month. But you can charge extra on that and say, okay, this apartment I'm renting that for $25 a month. $2,500 a month, which is $2,500 a month, and then you have $500 on top as cash, free cash flow, because the tenants will pay everything in the house for you. Okay, so the tenant is paying the mortgage. At the same time, you're getting extra cash flow into your pocket, which is extra $500 in your pocket, and that $500 you can invest. Does that make sense? So, but that's a side That's a side video that I've already prepared. Now let's move on to number 8. Number 8 is procrastination. This is one thing that is, most people will say, oh, I'll do it tomorrow. Have you done your budget for this month? No, I'll do it tomorrow. Tomorrow I'll do it next week. Next week I'll do it next month. Next month I'll do it next year. And the same thing goes when people on January 1st, New Year's resolution, everybody's New Year's resolution, but after 2 or 3 weeks, and you say, hey man, what about the New Year resolution? Oh, next year. Oh, next month. Oh, next year. Oh, next year. Next year never ends. We all know that because the world will never end. So stop procrastinating. You've got to start now. If you want to invest now, you have to start now. If you want to start saving 20% of your income, you have to start saving that 20% now. Not tomorrow, not next week, not next month. Now. Okay? Because procrastination destroys dreams. Procrastination is the biggest destroyer or the biggest killer of dreams. Do it now. And number 9 is the one I love so much. Well, my mentor always said this, Mr. Robinson, always surround yourself with positive people. Look for people that have been there, done that you're trying to emulate, you're trying to copy. Look for mentors. Women, men, whatever, mentors. Look for people that can motivate you, that can encourage you, that can rebuke you, that can chastise you, that can correct you, that can love you, that can support you, and that can help you get to where you're going. That's what you're looking for. Not people that can drag you down. Not things that can drag you down. Okay? Not people that want to spend money or want to just buy things and squandering their money. Buying cheap stuff from Alibaba or from China or whatever. Having all kinds of cheap stuff feed their garage or their spare room instead of renting a spare room out for Airbnb and make extra money from that, or renting their garage that they're not using for storage or for something else, and make extra buck from that. No. They have all kinds of junk stuff in there. Okay? That's not what you want. So surround yourself with people that will influence you, that will correct you, that will criticize you, because most of us, we cannot stand criticism. Somebody that can criticize you constructively, because constructive criticism is so important. Don't always look for somebody that will always pat your back. Don't do that. Look for somebody that can give you the hard truth, and the hard truth, because hard truth is hard love. Hard truth is love, y'all. Somebody that can give it to you straight. And not somebody that will begin to bounce the truth. Oh yeah, I understand it. No, you don't need it. You don't need it. Because you have to make haste when the sun shines. Because sooner the sun will go down. And it's all over. And it's all over. Dream lost. Hope vanished. And everything's gone. And you don't want that. Okay? So, and the last one, which is the one I love so much, as an accountant, as a financial person, but anyway, not taking advantage of tax benefits. I don't know, wherever you're watching this around the world, your government must have some tax benefit in the States, in the UK, in Germany, in Netherlands, in Europe, in Asia Pacific, in Australia, in New Zealand, in Japan, in China, in Hong Kong, in Singapore, Philippines, in India. The government has the government has these tax incentives. Try to find out what they are and how you can benefit from them, because they will put money in your pocket. They will save you money, and they'll put a lot of money in your pocket. Don't shy away whenever you hear about taxes, because I've seen that a lot of people, when it comes to tax return, when we do our tax filing, everybody's nervous. People are nervous, people are scared. You don't have to be, because you have to be looking at, there could be opportunity for me here. A few years ago, when I listened to Kanye West, the rapper, most of you know him, he got broke. He was broke, yeah? And when he got broke, of course, he was paying his taxes. He paid his taxes correctly. But IRS paid or owed him a tax return, and they paid him almost $150 million. $100 million or $150 million. And that money was what saved his career. That tax return was what saved his career, saved him from filing for bankruptcy. Okay? And many other people, including myself, have benefited from tax authorities. Okay? So you have to look for those tax benefits. Anyway, we've come to the end of this. And folks, if you've enjoyed this video and if you found it informative, you find it helpful, you find it insightful, please leave me a comment below, so I know the content I will be throwing out to you guys. I'll be producing for you guys that will keep enriching your lives and keep helping you. Subscribe, hit that notification bell, and share to those you think that will benefit from this information. Until next time, stay blessed. Adios, amigos. Ciao, au revoir.